Hey guys, how's it going and thanks for coming. I'm Nick, and in this video we're going over economic crisis and if we're headed there. There's been a lot of talks on stimulus, unemployment. However, at the same time, people are questioning if there's going to be a V-shaped recovery. So the structure in this video is I'm going to go over a lot of charts because anyone could just talk into a camera. I'm going to show you guys. So there's a lot of charts. We're going to be talking about the stimulus and unemployment, how that might help people right now, but at what cost. Then we're going to be talking about the short, mid, and long term of all of this. What could be happening? And word of caution, not what you may expect. So we have to hope for the best, but prepare for the worst. So if you guys could be so kind to hit this video with a thumbs up to help spread it to other people to hopefully prepare for the best that we can. So let's get straight into the charts. There's a lot of them. We're going to start off with the delinquency rate of consumer loans. And you can see, very interesting, starting in 2005 it kind of bottomed, then it started creeping back up, and then it just skyrocketed. And you could kind of see that's happening a little bit more now. In 2015 it kind of bottomed, and it slowly is starting to inch up. Now at the same time, you can't really go by this chart because a lot of people are being a little bit more lenient or putting delays on mortgage payments or rents. People can't go into foreclosures or get kicked out of their apartments yet. So it's a little bit more lenient, so it actually might be worse than we might think. GDP is very closely looked at, especially during recessions. This goes back to quite a while, but you could see every time it goes negative is a recession. The most recent one, of course, 2008. And most recently, toward the end of that chart, we are now negative 4.8. A lot of people are expecting that we are going to continue to see negative growth, especially since everything in the economy is frozen. A lot of people say that recessions are defined as 2 quarters of negative GDP growth. So we could definitely be in recession right now. It's not even indefinite. It's almost like 100% we're in recession. But how bad is bad? This is Industrial Production Index. You could see from quite a while. However, every drastic decline was in the middle of a recession, and you could go back to the 80s, 90s, 2000, 2008 was a huge decline. Now, there was a slight decline in 2015 into 2016. It wasn't as drastic as the others, but again, toward the end of the chart is what's going on now, is a drastic drop in production. Next, I thought was very interesting is domestic auto production. You saw a huge decline in 2008, and you could see a huge drop off recently as well. I'm actually seeing a lot of car commercials saying that you could get a 0%, I'm not sure if it was a car lease or car loan, but 0% for like 7 years. So it's crazy. They like just want to get rid of these cars and sell it for something. Manufacturers, you could see this chart, huge decline in 2008, and yet again right now a huge jump off the cliff. Now I do want to touch on how people spend a little bit because I thought this was very interesting that Amazon released their earnings. It's year over year, but I want to show you something. So right now you could see Amazon, they missed EPS, but I want to state you could see revenue of $75.5 billion, which is up over 26% year over year. I'm picking Amazon just because that's the main online place that people shop and go to, and you could see their spending is up dramatically. However, recently you could see, I saw this chart, personal savings rate, a lot more people are starting to save. This is kind of like a slap in the side of the head telling people like, hey, you need some money, save just in case. This is from the Federal Reserve website, by the way. You could always look at different data points and it's very interesting to see what you find. Fun fact, the Federal Reserve is actually not part of the government. The Federal Reserve is separate from the government. It's privately owned. So just interesting to know. But you could see this is the U.S. National Home Price Index. Obviously, there was a huge drop-off after 2008 in real estate, and you can see it went up after that, and it really hasn't dropped since then. Now, we do have to realize that the real estate market is usually delayed. I did a recent video of if right now is a great time to buy real estate. Is it going to drop at some point? And the real estate market's usually delayed 6, 12, 18 months or so, because when things start going wrong now, people don't default right now on their mortgages. It might take a little bit, so just something to think about. We're going to talk about now unemployment and stimulus that are going on right now. Now, ADP, this is a huge provider that helps businesses with like payroll and everything like that, and they just announced that there was over 20 million people that lost their jobs from March to April. Right now I'm recording this on Wednesday, May 6th. Jobless claim numbers actually come out Thursday, tomorrow, so there's probably going to be millions more that we're going to see. But you could see so far anyway, initial claims, jobless claims, you could see since even 60s, 70s, 80s, all the way up to the last recession, didn't compare anything close to the unemployment right now. It skyrocketed. Last week alone, it was 3.8 million, totaling over 30 million people unemployed in just a month and a half. And you could see this unemployment rate, you could definitely argue if this is even accurate or not. It's probably much higher, but it's starting to creep up, and people are expecting this to get much worse. So as people lose more and more jobs, as the economy continues to be in lockdown and closed, that could be debatable if you want to open it or not, but that's why a lot of people are focusing on stimulus. They don't have jobs, so they're hoping to get stimulus checks in the mail from the government. I have been doing a lot of stimulus check and unemployment updates for you guys. If you missed any of those, you could just check in my channel. Updates are coming out every single day, it seems, and more proposals are going into it, so we might be seeing a possible next stimulus check, so keep updated. But this stimulus isn't only for people like you and me, but it's also for big businesses or even small businesses. And it's also interesting to know that seems like big businesses get funding like in a day, when it takes weeks for small businesses or people like you and me to be considered. Interesting. But you could definitely see that with this chart. This is the total assets of the Federal Reserve balance sheet, and you could see there was huge purchases back in 2008, has really never stopped. I mean, it kind of slowed down around 2018. That didn't work out, and now it's not slowly at all, it's skyrocketing past the moon into the stars. So this is the time where we start questioning, could this bring even more problems in the future for an economic crisis, a crash, a correction? We're already in recession. Could it bring a depression? Next couple charts I want to show you guys is some of the assets that the Federal Reserve are actually purchasing. And you can see this through multiple charts, and I'll confirm it. So this is the first one. This is TLT. These are long-term treasury bonds. And you could see that huge drop off, and then they sprang right back up, and they're even higher now than they were before. Same thing in this field. These are corporate bonds. They fell off a cliff. Risk was rising, and Federal Reserve started buying up those as well. They're not at all-time highs, but they definitely rebounded quite a bit. Even more so, these are muni bonds. These are with different states. You know, you can invest in a certain state and you get interest that way. Those as well dropped off a cliff, and they rebounded just as well. Now, a lot of people have been talking about these bond purchases or just asset purchases in general about the Fed. You could see Fed releases details on BlackRock deal for the problem going on right now. Now, BlackRock is the world's largest asset manager, and they are helping the Federal Reserve run a bond buying program to steady markets that are unsettled by this illness. So if you heard of the term ETF, exchange traded funds, the Fed is actually buying those because it has like a bunch of bonds in it. So when they purchase that, it boosts all the bonds within there. Arguably so, it's not only bonds, but it's just across everything from mortgage-backed securities to even stocks. Silly me, I forgot to show you a graph of the stock market. Well, I'll try to recreate that right here. It's just about almost straight back up, despite any of this stuff, which requires huge amounts of capital. Who has huge amounts of capital? The Federal Reserve. Now, basically, all this buying is something that we have to focus on. The stimulus is what could be the huge problem that could lead to this economic crisis. I want to give a quick graphical representation. So as yields drop, that just means that bonds increase. So bonds have been in a bull market for, like 30 years. Now, interestingly enough, we could look into a little bit more risky corporate bonds that in 2008, they shot up. Because, you probably heard of this, with more risk, there's more return. So as people end up seeing more risk out there, then you could see the huge amount of yield increase. And you could see that all the way at the end of this chart, a huge spike up. However, it's been dropping back down, and that's because the Fed has been pumping even more money to keep those yields suppressed. People are worried about yields skyrocketing because of more risk in the system. So what the heck does any of this mean anyway? Well, I'm glad you asked. So we want to talk about how could this, what could we predict? What could we expect to happen? Well, we have to look at the short-term, mid-term, and long-term aspect of what could happen with all of this stuff going on. We can say a lot of people are questioning this huge amount of debt purchasing and just huge asset inflation, because we could see right now in the short term that the ultimate safe haven asset, gold, is actually increasing in price. But not that you think, but through their premiums. You could see that their premium over here, this is how much you have to pay on top of the actual price of gold. So gold's premium per coin is much over $100. Right now, silver coins, they're over $9. They're becoming definitely rare to find. So I remember I've been purchasing these for maybe a few months or several months ago. So gold premiums shot up. They doubled. It used to be $50. Now it's $100 because people are worried about this, so they're getting into safe assets. And gold and silver has been the safe haven asset for centuries, and that's why people tend to flood to them during these times. On the other hand, with silver, I remember their premiums used to be maybe $2, $3 over spot. Now it's $9 like you saw. So that tripled in premium. Yet not many people know this. Now at the same time, what could happen to the actual markets or the economy in the short term? Well, we have been seeing that a lot of people are actually saying right here, Fed's Kaplan sees historic contraction, need more stimulus. GDP will shrink 30% in second quarter, unemployment up to 20%. This is one of the Fed chair presidents. He's from Texas. Not the only one. The head of the Fed, Jay Powell, says the economy will likely need more support from the Fed for the recovery to be robust. So people, again, they're hoping for a V-shaped recovery. Will that happen? That's basically the question. And we just saw Steve Mnuchin, U.S. Treasury, to borrow another $3 trillion in 3 months. So in the super short term, with this huge amount of money, people are expecting maybe new lows in the markets. It could get worse. But with all this money, and I hate to say this because it's just ridiculous at this point, but in the short term, most likely they would succeed. With all this money, it seems like they are supporting the markets. They're pumping so much money into it that it's actually propping everything up. So with all this buying, whether it's right or wrong, it almost seems like it's impossible for the markets to drop, at least in the short term. And that's definitely different what people are expecting, because, the market's skyrocketing while unemployment is just plummeting, well, technically increasing. A lot of people are just becoming more unemployed. So it's much worse than the market is perceiving. However, when you look at it from asset purchases, it almost seems like it can't drop. But then the big question is, for how long? And that gets us into the medium and long terms. Now, we saw from multiple Fed presidents, multiple banks are saying that we could test new lows. At what point? No one's going to know that. But I will say they will continue doing this for as long as how much they need as possible, because I remember hearing an interview from Ben Bernanke. He was the Fed president during the last recession in 2008. And in that interview, I'll try to find it for you guys, it's very interesting, that even with that, all that asset purchases, he regretted that there weren't more asset purchases. So guess what they're going to be doing now? More asset purchases. So that's their plan. And at this point, it seems so screwed up, because every time more bad news comes out, market continues to go higher. So at this point, it's like bad news is good news, but for how long? So even into midterm, how long could they do this? They might be able to try to prop this up. However, the economy is still falling off of a cliff. Things really aren't changing. We're frozen. People aren't working. So a lot of people, including myself, you could have different opinions. You could do your own research and everything like that. I personally think this is far from over. A lot of people are thinking this could go into depression. I hope it doesn't. But it kind of seems like that, especially with all this money printing. It's just, look into inflation. That could be a huge problem. You know, I know in Europe, in the 20s, they went through hyperinflation. They needed a wheelbarrow of money to buy a loaf of bread. Could we get to that? Possibly, with all this money printing. So, especially for the long term, people think, oh, stocks for the long term, you can't beat it. That's true. I'm a believer of that. I'm a long-term investor. However, we cannot assume that just stocks are just gonna go up no matter what in the long term, because there have been decades where it's actually hasn't moved. It's been flat. You could see in other countries, Japan, for example. I hope we don't get like that, because it's been flat for decades, but they've been flat. So for us to think that everything's just gonna rebound and hit new highs, not necessarily. But let me know what you guys think. If you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say, especially on this topic. A lot of people are worried about a crisis. We're in recession right now, a possible depression even. So what do you guys think? Again, I will keep you up to date on all the stimulus checks and unemployment going on. So don't forget to subscribe and hit that little bell for the notifications for when new videos come out, so I could keep you guys informed, because it's just been crazy recently. So thank you so much for watching again, guys, and I'll see you in the next one.